The Trust invests in both Latin American equities and fixed income and is designed to deliver an above-average yield to clients and investors. The generation of income is very important to the investment trust. However, we didn't want to compromise the core equity portfolio by being forced to skew it towards more mature markets or sectors that offer a higher dividend but where the risk is more unattractive, for example, utilities. So in order to boost the income in the trust, we make use of sovereign fixed income instruments which offer a very high level of income.
The fund on the fixed income side is investing in higher grade Latin American bonds, typically investment grade rated bonds within the region. The bonds are denominated in domestic currency. These typically offer high yields and also the potential for some FX or currency appreciation.
The fund is structured with about 60% of the overall trust invested in equities. And there we have a large overweight position to the Brazilian market, where we find a broad pool of very attractive companies, and an underweight position to Mexico. That's largely driven by relative valuations. The Brazilian market offers a much more attractive valuation perspective than Mexico. In terms of sectors, we're very focused on the consumer sectors, both consumer staples and discretionary, but also financials, which offer us good exposure to what we believe are the long-term growth drivers in Latin America.
In terms of fixed income portfolio positioning, the largest position we have is to Brazilian bonds, longer dated Brazilian bonds, which offer attractive nominal yields of over 11%. Next biggest position is Mexico. Mexican yields are around 6%. With Mexico, we're confident over the medium term we'll see some pretty strong currency appreciation driven by those low labour costs. We also have positions in some of the smaller markets, Uruguay and Colombia. They're both investment grades. We both see them as improving credits.
In terms of income, Latin America already offers one of the highest dividend yields across emerging markets. We're also seeing, as the market matures, much greater focus on payout ratios. And of course, dividends already grow very strongly in line with earnings growth. So all of that makes it a good long-term investment for both income and capital appreciation over the long term.
What's attractive about Latin America is that really it's the one region in the world that offers really relatively high yields between 6 and 12% from government issuers, so that have a strong credit rating, investment grade. So it has that combination of high yields and a strong underlying credit.